Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Tuesday, September 7th. Great to have you with us once again. Thanks for making us part of your day today. I'm your host, Jesse Allen. Find us online, markettalkag.com. You can also find us. Our social media sites are there as well. The links, all of our streaming sources, everything can be found online, markettalkag.com. We had a down day across the board here today in grains and livestock coming out of the holiday weekend. Let's talk about it. Let's bring in our friend Matt Bennett with agmarket.net joining us here today for Market Talk. And Matt, good afternoon. It was fun getting to see you in person last week at Farm Progress. Now we're doing this again, and we didn't change the conversation much from last Tuesday. We got a down day here today, coming out of the holiday weekend, but it doesn't seem like folks were too surprised with what we saw today, Matt.
Yeah, the interesting thing is the overnight market, was actually just pretty blasé. I mean, kind of an extension, kind of a sideways chop feel to it, maybe a chop lower. You come in here on the day session, and really right off the bat, corn started heading a little lower, and it just seemed to me that there was willing sellers there, and there just wasn't anybody there to buy it because it would just continue to bleed just ever so slightly as the day went on. Now with soybeans, they tried to hold on to some gains, and then the bean market kind of gave way later on. But I've had a lot of conversations today, for instance, people calling me in full on panic mode that, I can't get $5 corn, for harvest delivery right now. And what do you think? And I'm like, you know what, we've been pretty aggressive. And I mean, it's not something I just say. I mean, with me writing the newsletter that I write, I'm bound to whatever I do recommend. I have to follow along with it too. So that's actually a good thing, because as we got into some of those levels, it forced me to make sales. Because I'll be honest with you, Jesse, there's times that I give really good advice and I'm almost tempted not to take my own advice, because I think, it's just going to go a little higher, the same farmer mentality of being afraid of making a sale because it might go up tomorrow. And so, it stunk. Today was not much fun. We've got a report on Friday. It's a big week. But at the same time, in a perspective sense, I'll tell you, we're still looking at significantly better prices than what we've seen in years, barring the last few months. And then you compare it to 15 through 19, we didn't get hardly any looks at prices like these.
So let's talk this report on Friday. The thought is out there that we're going to see increased acreage and increased yields for corn beans from USDA. That just seems to be the general feeling, especially with USDA coming in here with some of these acreage numbers a month early. What are you recommending to guys right now heading into this report if they're still needing to make some moves? You mentioned we're at that $5 corn mark, $5.10 on the December contract today. Almost 5.11. But I mean, what are you talking to guys about here this week, especially after seeing today and as we head into that report?
Well, there's a lot of things to talk about basis that question. All right. So first of all, you're at 180.2 on total corn and soybean acres, which would be the second all-time largest, right behind 180.3. Okay. So obviously we're bordering on some pretty good company. And so you ask yourself, where would the acres come from? Well, there are acres actually to go find. And I think whenever you look, for instance, at all wheat acres, just in the last three growing seasons, we've lost 3.5 million acres of all wheat acres. But I guess my personal opinion is that you're not going to be able to grow it substantially. We've talked about it as a team, and we kind of feel like whenever you look at people coming in wanting to maybe just plant a few more acres of corn, this spring, you already saw your input prices starting to rise quite a bit. And we didn't get into any of these really robust prices for quite a while. Your spring insurance price was $4.58. That's certainly a nice place to be. But at the same time, probably picked up a few acres. I don't see it being over maybe 1 million acres of corn. I don't know that you picked up any bean acres because I'm not so sure, that if you picked up some corn acres, they might have come from soybeans. And so, I don't see a huge increase in the total increase between the two. But as far as corn acres going up a little bit, yeah, I mean, the U.S. producer loves to plant corn. We know that. And so you probably picked up a few acres. So, what am I advising folks to do as part of your question? And plain and simple, it's this. If you're an above APH grower and you've run the math, so I'm saying if your APH is 175 and you're expecting 200 bushel corn, or if your APH is 200 and you're expecting 215, holy smokes. I don't know why we would snub our nose at $5 plus corn right now if I'm worried about it. Now, granted, a lot of folks have sold a lot of corn. People have asked me this question over and over and over. How much has the U.S. producer sold as compared to years past? And I say the answer is substantially more. You talk to most elevator systems. We've had all the opportunities in the world, and kudos to the producer for stepping in and making those sales. So, you know what? Do I want to chase this thing real hard, though, if I'm a below APH grower? Someone who's really worried about what the situation might look like from an income standpoint, I may not chase it too hard in here because, you've already dropped, 80, 90 cents off of this August report. And I'll tell you what, you've got to think you're going to find some steady ground in here somewhere. At the same time, that 200-day moving average on corn is creeping up. It's creeping up on us on soybeans as well, to whereas this report, you could go below those levels, and then you're in a little bit of trouble as far as a technical standpoint.
Well, and looking as well on the technical side here, I know we're starting to creep down towards some different levels here. We broke it through some resistance, some trend lines, beans settling well below $13 on the board here today, at least those front months, November 1277. I mentioned December corn creeping down towards $5. I mean, technically, if we get a bearish report on Friday, how much more damage do you think we could do to these markets moving forward?
Well, how bearish it would be, I think, would be the big question. I mean, you already see that the average trade guess is in that 1.4 billion bushel range. Now, if you're within 50 million bushels of that, I don't see how you would take the market much lower. In fact, you probably get a little bit of a bounce because, as you know, fear of the unknown is many times worse than the actual known. And so, I guess my personal opinion is, unless we get a wildly bearish situation, I don't see it falling precipitously. Now, keep in mind, the USDA in the month of August took 190 million bushels of demand out of the demand side of the equation. And I think a big reason they did that, obviously, is because the supply side dropped so much. And, the assumption is that high prices are going to cure high prices, demand's going to go lower, but I'll tell you what, if you start dumping 300 million bushels of total production in, you can pick 190 up very quickly. And I know where you can get it from, same place they took it from this last month. So I'm not so sure that they're going to increase demand the amount that they took it down this last month. But by all means, I think we all know it kind of resides out there. Whenever you see the corn export sales program going into the marketing year, the strongest we've ever seen for U.S. corn, you've got to think that there's the chance that those exports at 2.4 billion, they could be a shade low as far as the USDA is concerned.
Obviously, shipments were pretty low here this week. Those numbers today, just with all the issues in the Gulf, we're getting things reopened down there, though, and it seems like that this is maybe going to be, I don't want to say a temporary hiccup, but it almost seems, a week or two here, we should get back to normal. How much do you think that the issues in the Gulf are going to impact us here moving forward here this next week or two? It seems like everything's getting sorted out.
It seems like it is. It depends on kind of who you talk to. I think some systems were hurt a little worse than others, but at the same time, these companies being down, it's obviously extremely expensive. So the cost to get up and going isn't necessarily the limiting factor. It's just a matter of going out and getting the parts, getting the help, and putting things back together. And so I think I might have told you this last week, but my opinion on this since Ida went through, is that I guess I'd be just a little more concerned about the bean shipments due to the fact that this is becoming prime time for soybean shipments. So usually mid to late September, you start really churning on soybean shipments because we've got beans available to ship. And quite frankly, South America doesn't have a whole lot they can put out on the world market. And so, those shipments are going to be robust up until probably mid-February to late February, depending on when this first crop of Brazilian soybeans goes in the ground. I'm not as worried about corn shipments because, quite frankly, we just don't ship much corn in this time frame. And I've got to think that, you're probably going to ship more this year than you have in the past, but you're still going to ship mostly soybeans over the next several weeks. So we really need to see this thing get up and going. And I think we will. I'm like you. I think that the fear was that it was going to be a several week ordeal. A couple, 3 weeks is probably a little more likely. And I think you're going to see some shipments going out, in certain areas a little bit quicker than others. And then you'll get everyone up and going within a month, maybe.
Matt, as well, dollar was higher today. We see crude oil down a little bit. Got the Dow down a little bit, but overall, looking at that outside market and how that's influencing ags, what's your thoughts here after we get past Labor Day with what's going on there today?
Well, interestingly, Brian Split on my team, really good technical guy. And so he's been watching this dollar chart, and I'll tell you what, if the dollar goes up and fails just in that 93 area, you're looking at a head and shoulders pattern. And I think that if it was rejected and you confirmed a head and shoulders pattern, I think what you're going to see is the funds might decide to start building into more longs again in commodities, because there's no question that if that dollar is going to struggle to go up into some of those loftier areas, in the mid 90s, if you will, I think if it can't get into those areas, it's going to be really tough to not be friendly commodities, especially whenever you're looking, for instance, world corn continuing to pull back as far as stocks are concerned. A lot of folks think this Brazilian crop's even smaller yet. There's a lot of things to talk about on the friendly side for both corn and wheat. Soybeans, maybe not quite as much, but bottom line, we know demand for soybean meal is strong, is going to remain strong. So if I'm looking at somewhere to go out and spend some money, if the dollar gets rejected, I'll tell you what, commodities would be the first place I'd be looking. So yes, the funds may go ahead and shed some more length. You would expect that, especially as you enter harvest, but at the same time, there's still a story there to be bought. Now, I'm not super bullish, don't get me wrong, but I do think there could be some opportunity out here.
Super perplexing to me today, at least in livestock. Cattle and hogs both lower here, and we would have thought that with the lower moves in grains, we'd move higher in cattle and hogs. We had a little early support, and that just faded. I mean, was this just overall pressure pushing down on livestock, or do you see something else there? Let's start with cattle, Matt.
It sure seemed to me like everyone was just hitting a sell button today, no matter what it was you were looking at. I mean, there's a lot of red on your screen. You got to look pretty hard to find any green on your screen. But, you would have thought feeders with corn and beans getting hit the way they were, especially corn, that you would see this feeder market at least be stable, at least steady. I mean, this cattle market has sold off in a big way over the last, 9 sessions or so. We've really gotten beat up. And so, people have heard me lately have a little bit of a friendly tone towards cattle. And I think in the long run, it's pretty tough for me to get super bearish cattle. But did we get too hot too fast? Yeah, we might have. But at the same time, you look at placements where they're at, you look at demand as strong as what it is. And I think that you've got probably better days for you if you're going to be selling fats on out after the first of the year. So, I'm not too bearish this cattle market, especially after the drop we've seen. I think you'll see some sort of a boomerang here, a little bit of a rebound effect. As far as hogs are concerned, probably one of the hardest markets to outguess over the last many months. I haven't been real friendly hogs for a while. And I know that I've probably told you that more than once. You get hogs into even into the 80s. And I know that, you've got higher 80s on a couple of these contracts, but I can't get super friendly there. Yes, you're going to be basically what you're saying is you need incredible Chinese demand pretty much every week if you're going to have this hog market go back up even close to triple digits again. So, if I was an individual hog producer, well, I'll tell you what, I'd certainly be still layering in some protection because I could see a decent amount of downside still here in hogs.
Mad cow disease in Brazil. We're getting some reports about that real briefly. Do you have any thoughts how that could impact the beef side of demand here for the U.S. moving forward?
Yeah, I mean, it's certainly going to be in the back of folks' minds. I mean, we hear that, they're not going to be shipping any beef to China. I mean, who knows what happens if the Chinese come in and want to buy a decent amount of U.S. beef. I think that's certainly something that they could continue to build on. There's no doubt that people in that sector of the world love U.S. beef. It's just a matter of whether the Chinese want to step in and really go all in on it. So I think that's where you could maybe find some demand that you're kind of searching for right now, quite frankly. But at the same time, there's going to be a lot of folks that are going to be concerned. Is this going to be something more widespread in Brazil? Is this going to be something we're going to see in other countries, for instance, in the U.S.? Because that's definitely a concern. And I've seen Mad Cow before really do a huge number on the markets. I don't think it had a lot to do with the market here today, but you'd have to be crazy not to think it at least wasn't in some traders' minds.
Matt, great insight as always. Any final thoughts you have for us here on today's episode of Market Talk?
Yeah, I mean, as always, just be aware here. I was talking to producers this morning about $13 November beans because actually we were above $13 November beans. You settled at 12.77. Keep in mind, if that report, for instance, is bearish, and I'm not saying I'm bearish, then you could be trading $1 lower on Friday than what you were trading on Thursday. This thing can move extremely fast. If you've got good crops, there's no shame in protecting that, and you can re-own it later or just put a floor under it. But make sure that you're sleeping well at night, knowing this is going to be your most profitable year ever. Because if it isn't, you've had every reason in the world for it to be.
A lot of options out there for growers, no pun intended. Matt, if folks need a little help, a little advice, you and the team there at agmarket.net got a lot of ways that you can help them, can't you?
Yeah, absolutely. Agmarket.net, agmarket.app. We got a lot of technology, great research, second to none, in my opinion. So there's a lot of great ways to get a hold of us.
Matt, appreciate the time as always. Thanks for joining us on today's episode of Market Talk. We'll talk again soon.
Absolutely. Thanks for having me, bud.
Matt Bennett with agmarket.net, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Tuesday, September 7th edition of the show. I'm Jesse Allen. Have a great afternoon.